Basically, everyone, welcome. For those who are new, this is Saturday Tickers. We host this every Saturday. It's free educational content. What we do is we go over, the what happened in the market, stocks we're looking at, and then we head on to educational content, topics. So for this week, or I guess today, what we're going to be going over is, let me just make sure. Okay, I'm streaming. Yeah, you guys can switch over to my stream right now. So we're going over, of course, the tickers, and then we're gonna go over last time we held this because we've been holding this for 6 weeks now. Last week when we held this, during the questions, I answered a really great question, but unfortunately the recording got cut off, so I couldn't record that part. So we're gonna go over that topic today, which is option IV and how it affects option prices. It's more geared towards figuring out, what contracts make sense when it comes to day trading or swing trading. The next thing is fib extensions. Barely anybody knows how to use fib extensions, but it's actually very simple. And swing chart patterns, but that's only if time permits, because usually these goes on for 2 or 3 hours. Again, this is recorded. The main benefit of being here live is the fact that you get to ask questions. During the Saturday ticker part, you guys can put in the stocks you want us to look at in the main chat. So feel free to do that. But yeah, so we're gonna get started. Very brief introduction of who I am. You guys already know me. Market Bishop. My name is Kevin. Feel free to call me Kevin. I've been trading for over a decade now, bridging on 11 years. JP is the only other guy I've seen on here that on Discord that has more years than me. He's old, so he's got 20 years. But the great thing about live session, and I've had this for a few years now, and I'm bringing it back to life, is before it just used to be always me. And if you guys know me, I'm more of a price action guy. I'm a technical analysis guy. I never paid attention to fundamental analysis. I just read what's on the charts because I believe price action tells me everything I need. I don't use any, indicators and stuff like that. But the great thing is, even though I was successful in that kind of trading, JP here, who's my business partner, he's been trading for 20 years, and his primary focus is on fundamental analysis. As you guys saw him going on about his whole rants about Celsius and probably like Raytheon and AMD, and he's more focused on fundamental analysis. He uses indicators such as SMAs and stuff like that. So he has a lot more years than me. So you get two perspectives you can look at. And the funny thing is, when it comes to trading, there's never a right way to trade. There's just only ways you could be dumb and very smart. So you got to implement, things you learn and things you observe to try to turn yourself into something that could potentially be profitable, right? So you get two perspectives. You get to see, the way two minds work, and that could possibly benefit you when it comes to your trading. But we're going to head over to the Saturday tickers part. So JP, if you wanted to just quickly talk what happened this week and anything important we need to know.
Yeah, sure. Like we do every week when we start our session, we go over the economic data. Why do sorry, I was looking at Lisa Sue. I mean, she's just a 10. She's a 10. So last week, let's just dive right into it. Everyone was waiting for two things. Number one, we wanted the unemployment data on NFP, which is non-farm payrolls, that was going to come out on Friday. And we were really, really, really focused on the claims. Before I get into what happened on Friday, on Thursday, we had unemployment claims that came in hotter than expected. We were expecting 215,000. We came in at 224,000, which is interesting because you would think that because we are entering the holiday season, we would theoretically have a lot more employment because of retail, right? Because as everybody knows, there's seasonal employment. You go into like any store, like a Macy's or a Bloomingdale's or a Saks or a Marshall's, TJ Maxx, and there's a bunch of new people working there because they need the staff, because obviously it gets swamped. But it turns out that wasn't the case. Numbers came in higher than expected. Although something very interesting did happen. Continuing claims did come in lower than expected. So that means that people who were previously unemployed were able to get jobs, but the amount of people that became unemployed increased. So there's a weird cycle. It seems like people that were applying for jobs maybe 2 months ago or 45 days ago were able to get employed, and now we have a new cycle of unemployed individuals. So the number is kind of skewed, but still, it's a bad number, but it's not devastating. And then on Friday, of course, everyone was waiting for unemployment, the unemployment rate, and it actually ticked up 0.1%. We were expecting it to stay in line at 4.1%, and it actually came in at 4.2%. Non-farm employment change, which was what everyone wanted to keep a close eye on, came in higher than expected. It came in at 227, expected 218. So it's kind of like a big mixed bag of emotions because we're not too sure what's happening within the the inner workings of the labor market. But I have a feeling that something is going to happen. And as you know, Kevin, I've been short the housing market and I've been trying to go long the VIX for the past week. So something is starting to happen where these numbers aren't making sense because in addition to that, we had my favorite sentiment gauge for the economy or overall consumer sentiment is University of Michigan, right? And University of Michigan came in at 74 and we were expecting 73.3. So let me explain to you really quickly what consumer sentiment for U of M is. University of Michigan sentiment gauges what people are expecting, what is their feelings on the economy, right? Is it high or is it lower? So obviously, if 73 was the expected number and it comes in at 74, people believe that the economy is getting better. Well, if the economy is getting better, then why is the unemployment rate up? It makes no sense. So because of this jumble of data that is almost contradictory to each other, I kind of sit there and say like, what to do, what to think. Is good data good? Is bad data bad? Is bad data good? Or is good data bad? So I'm trying to stay away from any of the I'm trying to stay away from any data affecting my trading, right? So what I'm doing is I'm staying away from the Qs, I'm staying away from SPY, and I'm looking at individual companies because I think that what's going to happen going into next year, we might have one of those markets where it becomes a single stock kind of trade where people are trading, let's just say Nike or CrowdStrike or, Lockheed Martin, and it's going to trade on technical setups as opposed to on how the economic data is affecting the overall markets. So because we have such a weird mixed bag of numbers and all these things are all over the place, I'm trying to stay away from stuff that's going to get affected by this because you want to know something, you get a 4.2 unemployment print when we were expecting 4.1. The S&P drops, or let's just use SPY for this matter. SPY drops $2, right, or 2 points, and then decides that it's going to bounce 6. Like, I don't want to be trading in that environment. I don't have the heart for it anymore, even though I'm incredibly athletic. I'm just it's just not my jazz, and I want to stay away from anything that's going to impact my trade and that is economic data related. Something really important happened on Friday, which not many people paid attention to, and it was consumer credit. Consumer credit is up to 19.2 billion from a forecast of 10.4 billion. It's up almost double. Kevin, do you know what consumer credit is?
Credit cards?
Yep.
Debt?
19.2 billion. Explain to me how that's normal.
It's not.
Explain to me how that's not concerning.
Yeah, no, it is concerning. Absolutely, yeah. It's uh, it's almost reminiscent of the 2008 markets because, there's the data's all there, but people are in their own worlds, I guess.
So you're going to tell me that 19.2 billion on consumer credit is not a scary number? What happens when these people can't afford to pay their credit cards? What happens when they can't afford to cover enough of their minimum payment to pay their interest? I'm telling you, this consumer credit situation is going to be a catalyst for a catastrophe, a complete catastrophe. So we need to keep an eye on this. Just to move on past this, going into next week, we have a couple of important things that are coming, nothing huge. We have OPEC on Tuesday. Um, excuse me. We have a couple of important bond auctions, including the 10 and the 30. We have PPI, and on Friday, nothing really important, but I'm going to say something. A lot of people here don't pay any attention to the bond auctions. This is the last bond auction of the year for the 10-year. And the 10-year bond auction is really, 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 really important. And for you guys that don't know anything about bonds and what the 2-year and what the 10-year is and how paper works, paper or coupons, or in this case, the payments that you get from holding bonds. If you guys don't know how paper trades, not how wait how bonds, which is known as paper, how paper affects the market, you guys need to learn about bonds because bonds are a big, 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 big factor on what's going to happen in the overall markets, especially in the S&P and the Dow. Kevin and I have a mutual friend who is my mentor. I won't say his name. He was the head of the UBS 2-year bond department from 1986 to 1997. He was number 2 at UBS. He was one of the biggest bond traders in the world. There are books written about him, and he is one of the most legendary Wall Street traders that has ever lived. And we talk to him on a regular basis. And let me tell you something. The smartest guys on Wall Street are not futures traders, they're not the options traders, and they sure as hell are not the equity traders. It's the bond traders because the bond traders are trading billions of dollars, not millions. So keep an eye on the 10-year bond auction on Wednesday because this thing is going to be, it could create shockwaves. So something to mark on your calendar. The bond auction is at 1 o'clock. The print for the bond auction comes in at 101. And just so you guys know, the way that the bonds trade, the real move doesn't happen until 10 minutes after the bond auction is announced. So don't think that you see oh my God, the bonds are moving, the market's moving. No. You got to wait 10 minutes after to get the real move. And Kevin has been a witness to this. Have you not?
Yep.
10 minutes after the bond auction happens, some insanity takes place. And we're talking about billions of dollars start moving and these yields start going nuts. So something to keep an eye on. The 10-year is more important than the 30, which happens on Thursday. So mark that on your calendars. At 1 o'clock, the print comes in at 101 and 10 minutes after. This is Eastern Standard Time, 10-year bond auction, December 11th. So that's it for the economic data.
It's funny you say you're athletic. They should see your jump shot when you try to shoot a basketball. But
Uh,
yeah. So we'll go over the stocks that per se both of us are looking at. It's great that you brought up the whole consumer credit thing because of course one of the stocks that I love long term is AFRM, right? And AFRM, I'm pretty sure it falls in that category. It's pretty bullish here. We've gotten above two very important levels, 52.90 and 68.47. And I always like the firm as a stock because ever since I've seen it being implemented into Amazon, even though I don't have to use it, sometimes I use it. Like I found myself using it like last year when I got so much on Amazon. I'm like, this cart's like almost $3,000. Let me try splitting up, or $1,000. Let me try splitting up, right? Just because there's just that thought like, hey, let me try splitting it up, right? Um, Ever since it's been on Amazon, like this has just been really great, and I think it's a stock worth looking at in my opinion, especially when it comes to long term. So Firm is definitely one of them.
Yeah, I hate to cut you off, but I'm also gonna go ahead and stream my my charts because you've reached capacity on the amount of people that can view you. So I don't just tell me what you're looking at and I'll share the chart as well so that we can both kind of be
yeah.
showing it if that makes any sense, okay?
Yeah, sure. I was looking at Firm, but I'm just gonna move over to the swings that I got, and we'll move over to your stocks. But as JP
I
said,
already went. I'm just saying, like, I'm showing my charts, the same thing that you're talking about, just because your stream is full. That's
yeah,
why.
yeah, yeah. So if anybody can't view my stream, you can feel free to view JP's. Uh, but yeah, so DPC, I've been bullish on this long term for a while.
Domino's Pizza, huh?
Yeah, yeah, but it got added. Berkshire Hathaway added it, and a few other guys added it to their holdings, and ever since then it's been rallying. But I got puts on this on Friday. Easy setup. I think this is just something that comes and retests 443.09. So that's why I got the Domino Pizza Hut puts. ARK. Everybody knows ARK because of Kathy Woods. It's one of JP's favorite ladies.
Oh
Tesla's
yeah.
been Tesla's been rallying. I've been saying all year, since January and February, people call me crazy. Even when Tesla reached 140, I said Tesla is going to reach above 380, and Friday it finally breached that point, and I felt so much satisfaction. It's crazy. But ARK does hold a significant amount of Tesla, and Tesla is reaching really astronomical heights. I think we kind of reach a little bit of a plateau in the next coming weeks before the end of the year, but I do believe Tesla will be bullish long term, especially heading into 2025. But this kind of ties into ARK because, of course, when Tesla gets momentum, so does ARK, and ARK is an ETF, so it does have other stocks in its holdings. But you can see here on the weekly chart, it's had a decent amount of consolidation, and it's finally breaking out of this. We did get ARK calls on Friday. I sized light on this. The reason why I sized light is because theoretically you are not getting the greatest entry. You're kind of quote unquote chasing because you are chasing a breakout. But I do see, ARK, if I draw a fib over here, ARK has a lot of room if it keeps continuing. If they make the right choices for their holdings, and you know, Kathy Wood is extremely bullish on Tesla all the time. So if she does it right, this has room all the way to $93. I have not gotten shares on this yet because I want to wait for it to retrace. But I do see this eventually hitting $93 sometime next year, so that's what I'm looking at when it comes to ARK. Hood is a trade that JP and I took. I think he kind of explained it beforehand before I came on. JP got it. JP's primary basis was because he had a thought it could get included into the S&P 500, and I also honestly thought too. I thought it was between Coinbase and Hood, as probably JP said. But when he called me and he talked about this, one thing I really loved was just this chart on Hood. It's very clean. One of the first core things you want to learn about price action is just really realizing, okay, where are the higher highs, higher lows, and Hood is having higher highs and higher lows, right? And what that means is it's bullish. So we have higher highs, higher lows on Robinhood, and it's not really like steam is cooling off here, right? So we have this supporting trend line. It's bouncing off of it. You could draw it any way you want. You could even turn on extended trading hours if you want to, and you could do whatever you want. But you could see there's a clear supporting trend line. It's holding that, and it's finding its ways up. Of course, since it didn't get included in the S&P 500, it did lose some momentum in the after hours. But I always keep saying after hours is not as important as pre-market and, of course, regular trading hours. The next one is Ralph Lauren. Ralph Lauren, I think I got puts on this. Very simple daily chart. He had a top projection of the previous high of 236.96. I think this is all-time highs. I'm really not a fan of shorting all-time highs. I always have a saying you never short all-time highs, especially with tech stocks. But I did want to just take a small chance with Ralph Lauren here because it gives me a little glimpses of ANF. And ANF is a really great stock that you used to have on long term because, as JP says, it used to be one of those stocks that's up and to the right. So that's why I got the puts on Ralph Lauren over here. But I do think long term Ralph Lauren is bullish, especially heading into December and next year. The next trade I got into was COF. I love this chart. I love the daily especially. We had another higher low. And when I got into this,
Oh yeah, I forgot to talk about that. You did take that trade. I got in with you. I forgot to talk about that.
yeah, exactly. We got in. JP and I both got in. So I got this on Friday. We got it before. I usually get before close, but I got this before close. I love this bounce off the 186.36 level, and the 30-minute chart just looked really beautiful. You have a really strong bullish candle here. And of course, we'll get into price action one of these following weeks, but I have these topics in order because it's important to know the stuff before price action because, you want to know the important things. But, just briefly over here, you have a really strong bullish candle, and then the following bearish candles are very weak compared to the bullish candle, right? So when you see that and you see it holding above a level that's very important, and we've always talked about the past weeks, one of the easiest levels you can always find is a prior resistance or prior support that turns into the opposite, right? So if you have a prior resistance and you have price breaking above that, that resistance turns into support. So you mark that down, you see how price reacts to that, and you can see here on the 30-minute chart on Friday, we had a nice bounce off of the 186.36 level, and that's what's like, okay, all right, 30-minute looks great. And then one thing you could see right over here, if I could somehow show it to you, I don't know how this works, so bear with me. But one thing I saw on the 30-minute chart was this, right? The head and, oh my God, inverse head and shoulders.
What time frame?
The 30-minute. So you could see here on the 30-minute, there's actually a mini inverse head and shoulders. So I was also bullish in that part, and I love the fact that I held above that level. So if we go to the daily chart, if we tie in whatever I said, that's a really nice, it's one of those charts if you see like in the long run where you have a supporting trend line, you just see like it's just following up that trend line. So that's the reason why I got into COF. The last two tickers I'll talk about is Oracle. You guys know I trade Meta. I really love Meta. Actually, I'll go to Meta first and then I'll go into Oracle because they kind of tie in together. Meta reached all-time highs this week, and I'm really happy for it. In fact, it reached all-time highs on Friday. You guys know Meta Friday. It's one of the most successful zero DTE stocks I've ever traded. It used to be Tesla Friday. Tesla Friday was amazing. I think Tesla Friday would start becoming a thing again, but we had to wait for IV to drop on those. But the really beautiful thing about Meta Fridays, and the reason why I traded Meta was not just because of any dumb reason. What you had here with Meta was a perfection between two kind of different stocks when it came to option chain. You had a mix of Nvidia and you had a mix of Netflix, and I'm going to get into why I'm saying that. Nvidia had, and this ties into a topic we'll talk about, the first topic, which is IV, but Nvidia had an high IV option chain, which allowed the contracts to move very violently, right? So Nvidia had the high IV, right? But the bid and ask was always tight, meaning you can literally get filled at, if the contract was like 130, you could get filled at 130 or like 129, 128. It's very tight. Netflix, on the other hand, Netflix had low volume on its option chain compared to Nvidia, of course. So because of that, the bid and the ask was very wide, right? But the IV was not as high as Nvidia. So you would get like a really strong move on Netflix, and because the bid and ask was very wide, yes, you would get like a skip from 130 to 150, but it's not as great if it had enough IV, right? But Meta is literally the combination of both. It had the IV part. It had 40% or 30. It had 36% to 40% average IV, which is good, and on top of that, it had a really nice bid and ask spread. And on top of that, the contracts were very affordable. Now, if you look at Meta's contracts, it's very sad. I'll literally pull it up right now. If you search up Meta's contracts and you even look at next week's, They are at an insane amount. I think they're bridging on to like I don't know why my thinkorswim is a little bit delayed, but I'll let that load. But Meta's contracts are just at insane rates right now, and I kept on saying this. Unfortunately, we had to take opportunity of when Meta was trading in this range and leading up to all-time highs, because the second it reaches all-time highs, there's going to become a lot more investors invested in this, and IV is just going to be all over the place, which unfortunately increases the prices on contracts. So unfortunately, it seems like Meta Fridays are not going to be so much of a thing. It's going to be there, but it's not going to be always a thing. But another great stock that's coming up is Oracle, because Oracle is another stock which is very bullish. It reached all-time highs last week and the week before, and the contracts are decently priced, and the IV is very low. So Oracle is the stock I'll be trading in the upcoming Fridays, just so you know, for anybody, because I get like 100 pings, like, oh, it's today Meta Friday, it's today Meta Friday. Unfortunately, it seems like Meta Friday is not going to be so much of a thing anymore. I really hope it will be. For Meta Friday to be a thing, we would want Meta to retrace into its prior resistance, which is 593.64. If it comes down there, sets investors to reality, I think we can have a little bit more reasonable contracts. But so that's just the stocks I'm looking at. JP, I want to just throw it over to you. Briefly, what are the stocks you're looking at and why you're looking at them, and I'll look at them as well.
I went. Oh, even though I know that this isn't part of it wasn't recorded. I went over a couple of things that I was looking at, but the main thing that I want to talk about that I am watching is Sentinel One. I already went over your CrowdStrike trade, by the way, so we don't have to talk about that unless you want to. But Sentinel One for me is a great trade. I think it's a great company, has a great story. It's a cybersecurity company. Unfortunately, it did dump on earnings. It did not. I hate Wall Street. I really do with a passion. Sentinel One did not miss earnings at all. It did not miss earnings. Sentinel One did not meet the street's estimate. So therefore, it got smacked and it puked all the way down to 24.48. It did not miss on revenue. It actually is up on revenue. Revenue growth continues to increase. Subscription customers continue to increase. And to be quite honest, they meet their numbers. They just came in flat. I think it was a preemptive sell-off for no reason. We bounced off a key level at 24.48, which was also the 100-day SMA on the daily. That gap that it has all the way to 28 is one that I think it's going to fill. I know a lot of people are going to look at that trade and say, hey, man, I know you're an EMA SMA trader. If that's the case, the 10 and the 20 look like they're going to cross. I think that that's going to be a fail cross, and we're going to have a huge pop on this, especially going into the Christmas rally. If you look at VRVP, you'll see that there's a nice gap that needs to get filled all the way up to, like I had mentioned, 28. But there's a big volume gap between 26.31 all the way to 27.54. I think that as soon as we're able to get above 26.42 or 26.64 or anywhere above 26.20, we're going to just have a massive run to 27, and those contracts are going to fly. That is my main trade. That is what I'm watching, and that is my primary focus going into next week. I do have one more trade that I did really, really like, which is RTX. I know. We took this before. I explained to you guys that were here earlier that I had a failed trendline breakout on RTX. It was great. It looked like it was going to go, and then it just dumped on me. However, we have held 117.76. I think that there's a possibility that if we come back to retest at 117.26 again, it's going to just form a giant base down there that they're not going to let crash below. We can see that every time it's gotten there since September of this year, it's just bounced right back up. I want to be long this. I don't know what contracts to take. I sure as hell ain't taking the 125s because they're too far out of the money compared to when I took them when they were at 121. I think I want to look at the 120 calls. I want to look for 45 days out. And I want to see what price action does on Monday. And if I can get above, people are going to think I'm crazy here, but if we can break and close above 118.50, I believe that's what it was, or 118.30, whatever the high of Friday's candle was. What is that? 118.37. Let me give you the 118.35. If we can break and close above 118.35, I'll look at taking a long option call on that. And those are the only two things that are on my radar. I know that you were looking at Merck, and I think we kind of did not go over it. And I think Merck is worth watching. It's on my like, you know,
Yeah.
immediate watch list. Um, but I
Um,
think you can do a better job of explaining that than me.
yeah. Two things. One, actually, Raytheon. It's funny. JP talked about it, after hours, and I was actually pissed off because I love that 2 hour chart. We held 117.42 or whatever level JP had, um, and it just looks really great. It just shows that the support is confirmed. But it's my fault I didn't see this. I really wish I did. This would have been a great trade. I think it would be reminiscent of what happened on November 5th, which is where we got a huge gap up from Tuesday to Wednesday. I think that was like a 4% or 3% move. So the Raytheon is something definitely to look at in my opinion.
I
But
mean,
then,
I keep getting, I don't want to put myself in that position again where I get smacked on it. I
yeah,
just want to wait on that trade to really work itself out. I hate to cut you off. Before you jump into Merck, I want to talk about something that a lot of people don't know, which is SRS. Can you put that on your chart?
what SRS?
Yeah.
Ooh, I don't see a stock.
S as in Sam,
Oh,
R as
my bad, my bad.
in.
Yep.
So this is the ProShares Ultra Short Real Estate.
JP, what's this
Um,
volume, bro?
what'd you say?
That volume is terrible.
It's terrible.
Yeah.
But here's the thing with SRS. If you think the housing market is going to collapse, this is what you want to be in. And I think that there's going to be a massive correction to the housing market. Um, like substantially. Um, to the point where I think that there's going to be probably anywhere from an 8 to 10% correction on on the housing prices in major populated, cities. SRS has been holding this 44 level. Um, I have this on watch for a potential breakout above 47.87. Um, I have an alert at 48.84. Um, I've traded this multiple times and I've caught the bottom on it multiple times. And when it goes, it goes. Something to keep on watch for you guys that are bearish on the market. And this could be a really, really good trade if things start going, if things take a turn for the worse in the real estate market. Something to keep on watch. But I'll let you talk about Merck now.
Yeah. So Merck, very simple daily chart. You could see an inverse head and shoulder again, similar to what was that? COF, Capital One Finance. But this is on a bigger time frame, the daily time frame. So we're holding a previous level of 97.24. We bounced above that. We've been in an MRK trade before and it went really well. We've been in two of them, and I haven't gotten into this yet, but I am in it for my long term, so shares. But this is a really good thing to look at. I think it's really worth looking at. The Merck is one of the biggest holdings in S&P 500 health sector. So if this goes as well, and for example, Eli Lilly goes as well, which is LLY, if both of those goes, then there's a decent chance that Merck, will continue to the upside, probably to around 122.50 or around that range. So Merck is definitely something great to look at. I personally think it's great for shares. I have shares. I got a fill around $97. So I have a really good entry. But Merck is something if you want to get options on, maybe you could wait for a little retracement or something, a hold above an important level, whatever that might be, if it's like 102.54s, or something like that. But you could see there's a clear inverse head and shoulder pattern. So it's something we think you should, we're keeping an eye on. Well, before we head over to, wait, JP, was that all the tickers you had?
I mean, yeah, that's really the only. I mean, I think there's going to be a lot of more setups come Monday. I think I want to see how the pre-market, well, not, I'm sorry, how the future market, how the futures market opens tomorrow before I start making decisions. But the only things that I'm really watching, I'm keeping everything light and tight. Sentinel, I have my Meta 1000s and Hood. I mean, that's pretty much it. There's nothing else that I've gone through on my watch list that's driving me like, oh my god, I gotta take this. I want to bring this company up, but it's a little too pricey, and I know that a lot of people are gonna like look at it and be like, what is this? Kevin, TPL, Texas Pacific Land Corporation, if you can bring that up.
Yeah.
um Without getting into too much information, this is a company that I hate myself for saying this. We were told to take this back at around 589.
Yeah.
Is that not? Yeah, 589. And as you guys can see, it's an up and to the right chart, and it went all the way up to 1750. Um, Texas Pacific Land Corporation is exactly what the hell it is. It's a company that owns all the land where they have oil, water, and natural gas. And they actually, what they do, believe it or not, is they do land leases. Um, it's a phenomenal company. This company was actually added to the S&P, and when we were told to get into this, they kept saying us, "There's big news coming on it. Trust us." It's one of those trades that could have been a little bit life changing, but there's always another trade. Something to keep on your watch list. Yes, it is expensive. I don't even think that the options on this trade well. But if you want to be in the oil, gas, natural gas, land, or water trade, this is the company to be in. As you can see, it's had a big sell off, but I can tell you from information that I personally have, and knowledge that I have, that this is a heavily traded institutional stock. Um, Something to watch, something to keep an eye on. Remember, this company, they have land and they own the water, the natural gas, and the oil on this land, and they do land leases. So think about the amount of money that these people are making. It's heavily, 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 heavily owned by one of the biggest hedge funds in the United States, which is ran by one of the most successful hedge fund managers that I've had the pleasure of speaking to, and is one of the smartest men I've ever met. And you can find all that information out on finviz.com by typing TPL, because I'm not here to promote anybody. But TPL is something to watch, and I think you should keep it on your radar. Another one that's something that you should keep on your radar is INFL. Let me know when you type that out. Okay, so this is Horizon Kinetics. If you guys know what I was talking about before, you can connect the dots on this. This is exactly what you think it is. This is an ETF on the inflation beneficiaries. This ETF is an ETF that has companies inside of it that benefit from inflation. As you can see, it's an up and to the right chart. So these guys, since let's see, since February of 2024, this has been an up and to the right chart, and the stock has almost doubled, if not gone up 75%. Am I right, Kevin?
Yeah, about that.
Something like that.
Yeah.
Something else to keep on watch. It's a heavily institutionally traded ETF. It's boring. It's not sexy. It's not something that you go to the bar and meet some chick and say, "Oh my God, look at my portfolio. I have ANFL." But if you have if you have a portfolio with a good size amount of money, watch for this to come back up and see if it does a head and shoulders and comes back to that 39.39 range. I wouldn't be taking it. I would want to see a retest of that 39.39 price range, or that $40 flat price range, to see what happens. And then I would want to see if it comes back above 41.75. If it does, I would look for this to continue to go to the upside. However, if the head and shoulders does play out, I would be looking for entries anywhere around 40 and 39.62. If you believe that inflation is 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 not coming down, and you believe that inflation is entrenched into the U.S. economy, this is something to watch and something to study in depth. So these are these two stocks, TPL and INFL, things to look at on a deeper level. And that's it.
Yeah, it's funny because JP talked about these earlier. One thing, but by the way, you guys can post the tickers you want us to look at in the main chat. Please do it in the main chat because that's the one I primarily look at. One thing I want to make a correction on because I'm really dumb. I did not mean to say Oracle. I don't know why I keep on saying Oracle instead of CrowdStrike. As you said, JP, yeah, thanks for explaining why I took that trade on Friday. But what I meant to say is I wanted to, instead of trading primarily Meta on Fridays, the stock I'll be looking at is CrowdStrike. Oracle's good as well, but I did find CrowdStrike to have a little bit better of a reaction. So to the contracts, like it skipped very well. The contracts were very fluid. So it's just something I would like to keep an eye on. You could see here this can potentially when's all-time highs? Is it? Yeah, it's recently. The all-time highs is pretty close. So if we get above 366.42, we can capitalize the great movement on the options, especially if it tries testing all-time highs. So calls will be great on Fridays. That's things I'm going to be looking for. So yeah, so I meant to say Crowd, not Oracle. Thanks for reminding me when you talked about Crowd earlier, JP. But yeah, so we're going to head over to the tickers that you guys want to talk about. And then after that, we're going to go over the whole IV thing. So let's see. So
I'm gonna let you take this over for a little bit. Just with whatever the first ticker is, I'll type it on my chart. I just have to walk my dog really fast. It's gonna take me 5 minutes.
Yeah, no worries. Let's see. You guys asked for. Oh my god, there's so much. Okay, Roku. Roku's great. I love Roku. I actually made a post on this on Twitter. And by the way, you guys should follow our Twitter. We'll post it in the in the links channel, just because we were planning to put a lot more content on that. Now I'm going to be posting charts. JP's going to be posting charts and his fundamental analysis on it. But yeah, something great to follow because we're going to be more active on those. But Roku is something I love personally long term as well. I'm looking to get shares on it. I've been selling puts. It finally got above 65, 69 level, and it's held above it. The past 3 weeks, it's bounced off of it, as you can see down over here on the bottom right. You can clearly see the target I have for Roku, which is 264.90 from a current price of 84.12. Will it reach there? I can't really say that. Uh, I don't know too much about Roku and how it's doing sales wise, but I did hear, one of the biggest reasons, if we go to the daily chart, for example, that Roku is doing amazing is because one day it gapped up like 7%, and I believe it was Monday this past week. And the reason is because there was data collected saying that Roku actually performed really well in sales on Black Friday compared to last year. So what that shows is we're starting to find a little bit more. We're starting to find consumers shift into products like Roku. And Roku, believe it or not, I'm not sure if JP mentioned this when he was talking an hour earlier. Roku is one of those stocks where, where if inflation picks up, a recession, possible recession happens, these are one of the stocks that are gonna, do well, right? Because of course, not a lot of people have cable TV, but if they do, they're gonna switch from that to Roku because why they want, the people have less people have jobs. What are they gonna do? They're gonna be at home. They're gonna be, I don't know, this is gonna be sound very unethical, but they're gonna be depressed. They're gonna be watching Netflix, and they might not necessarily have like a smart TV, right? I'm not so sure how Roku works, but I'm pretty sure all you need is an HDMI input, and you just plug that in, and then there you go. You have technically a smart TV for a dumb TV, right? So people are not going to be buying dumb TVs. They're going to have simple TVs. They're going to plug in Roku, and they're going to access their Netflix, Hulu, whatever you want to watch, right? Even YouTube TV is becoming a really attractive option because for those who watch the NFL, I watch the NFL. There's what's it called? Sorry, I blanked out. There's You can literally watch almost all the games on YouTube TV for a cheap price of like $72 or something that like that per month, which is expensive, but compared to what it used to be for like all the different prices for like Sunday ticket, NFL Sunday, and all that bullcrap, like it's cheaper. So we're having cheaper options. Roku is one of those cheaper options. As JPAT said in the main chat, Roku actually comes in with some TVs, so it's becoming a lot more available, and it's going to become, in my opinion, a lot more enticing for people to look at, especially if they don't want to spend a fortune or $400, $500 for a smart TV. So if we go to the technical setup itself, you could see, as I said, weekly it's holding above important levels. Right now, what it is testing is a prior level. It's coming around this area, which is around 86.44. I do want to get shares on this, but I would rather it retrace and then bounce off of an area that I find important. Two areas I'm personally looking at, and of course, if I say I'm buying shares, that also means that would be an area I would possibly looking to buy calls. It's just, of course, longer term is something important to look at. But the two levels I'm looking at here is 78.61 and 72.53. Personally, for me to think this is a healthy movement to the upside, I think it cannot breach anywhere lower than 78.61. The reason I say that is because we'll get into this topic another day, but one of the things that's very important is Elliott waves and Elliott impulse waves. One of the rules for the third and fourth for the second, oh my god, let me just draw it because if I just speak it out loud, I'm gonna be a complete idiot. So the impulse waves theoretically look like this, right? So the second pullback, the 3 to 4 wave, this wave cannot breach below the area of the 0 to 1 wave, right? So if it breaches below, then there's a lower chance for the stock to actually continue upwards. So what you will want here is you would want Roku to technically come down to 78.61 or in that general area, bounce off of that meaning, let's say if you go to a 30-minute time frame, you see price retracing down here and then it bounces up, right? That'd be really great because then this is one, I personally think, a great area to buy shares. And you can see here, I actually made a Twitter post about this. One of the great things is not Twitter. Roku has been having higher lows, and it created two higher highs, and it created a second one after the third one after I posted on Twitter. So this is great, but it can't really breach down here to 72.53 because yes, it will be a higher low, but also you're coming down too much, and that's too much steam lost, right? So it's very important, in my opinion, for Roku to maintain above 78.61. This would be a great area for me to personally look for calls and for shares. So you guys will see probably this next coming week. Roku is actually something I have a close eye on, so I'm really glad for you guys to bring that up. The next stock you guys asked is ARM. I've traded ARM a few times before. We'll go over to the weekly chart here.
Kevin, I'm sorry to interrupt you. I just want to remind everyone I was streaming my charts, but I'm no longer doing it because Kevin's stream has opened up. There are still 3 spots left. So if you were watching my charts and are asking why I turned it off, it's because Kevin has 3 open spaces and I'm watching his now. So if you guys want to join, make sure to do so.
Yeah,
If for some reason it does get full and you guys can't get in, please put the message in main chat and I'll open up my chart.
thank you, JP. But ARM ARM is a really great chart. One level you could see out here I'm looking at is 136.39, and it's so funny. Sometimes I look back at charts and I find a level I put down like 3 months or even a year ago, and I look and it's actually respecting that, and it's just funny because that's exactly what happened here in ARM. The last time I traded this was like 3 months ago, so we're holding above 136.39. Reason it's important, you could see multiple times we've tested this area, back here in October, back here in August, and all the way back in March. And we broke above and broke down it before. So this indicates this is a very important level to look at now. Does this have upside? I personally think so. It did reclaim and maintain above this level. It really depends how this next coming week happens. You could kind of, sorry, I'm burping in the back end. You could kind of eyeball this trend line over here. This is one trend line it has to theoretically break above and maintain above this next week for it to remain bullish. Because if it does not do that, what this will become is into a bear flag. And again, excuse me for my English, it's my second language, not my first. So this can easily become a bear flag. So keep in mind, it's something to look at, but you do want it to break above this trend line. You can say this is a pennant because it technically is. If you extend it, you could see the bottom trend line comes over here, top trend line, yada, yada, yada. But a great movement for ARM would be a breach above this trend line. I personally won't be trading the breach above, but what I would be trading is a breach above, and then either coming down to a level that's important. So you can just eyeball a level, let's say like 149.93, because you could see it's a level over here. It's rejected, and it's rejected multiple times in the past. So you have price come down, bounce off this level, and you take it off of that. Or what I would possibly do is I would wait for it to breach above, come down, bounce off this trend line, and if it bounces off of this, then I would love to trade that to the upside. I personally would favor the first scenario I talked about. I'd love for it to come down, and I'll draw this level just so you guys could see what I'm talking about. I'd like for it to come down and bounce off this level right over here, because you could see this is like technically the top of the range we had throughout this time. So yeah. And before I move on, anything you want to say about ARM or?
Heavily traded right now by institutions and is being bought up heavily by institutional traders that I personally know, and that's all over the news.
Okay, that's cool. Okay, I didn't actually know that.
Yep.
Yeah, Dollar Tree. Oh, this is so funny. I remember I got calls for this. I know some of you guys remember this in October. Because, I mean, look at back then, you had a nice bearish channel. And the way bearish channels usually work is you have bearish channel into support. And then once it comes into support, you have a nice bounce to the upside. You could see here, I think I entered on this candle. The contracts went up a little bit. I bought the $80 calls for Dollar Tree, and it was for, I think it was December, so it was going to expire next week or the week after that. and it just completely rejected after that. It's a sad story. I don't know what to say. It came down and wanted to make a double bottom instead. Can't complain. Everything's 2020 in hindsight. But from an options approach, I think this is more of a leap kind of thing. You can technically swing trade this, but it's a little bit riskier just because you could see clear patterns are not really playing out except this double bottom. So I guess what I would do here is I would look at this for more of a shares approach. Obviously, the clear areas I would personally look at is the target of 81.66 because that will close up the gap that we've had ever since its bad earnings report in September. Sorry, my throat's dry. But sorry, I had to take a sip of water. But I think the area I would want to look at for shares is a little bit higher. I think if we maintain, if you have a bounce above 68.29, it would create a higher low, and I think this could eventually test 81.66. I would personally buy. Me personally, I think I'll be looking at. I'll even set an alert here. I personally would be looking to buy leaps here, especially if you have a nice bounce off of it, because then that will create a nice first impulse wave into 81.66. JP, anything you want to say about this?
Not really.
Okay, all right,
Nothing on my end.
cool. All right, target. It's very funny because it's actually not funny. I lost $4,000 on this for a very dumb mistake. I bought leaps on target over here. So I bought it right here on Monday 18th of November. And my dumbass did not realize earnings was 2 days afterwards. So I bought leaps, and I was thinking, oh, I think I got like the 180 calls or something like that. I'm like, oh, this is a great chart on target. We're holding above 148, 148 flat. We could possibly test 176, whichever this level is. I think there's a fib level. So around 176, right? That was my whole plan. It was a really great chart. Of course, earnings comes and, I lose 98% value on those contracts. So that was a real pain. Uh, it is what it is. But, looking back at it now, should have done that. If earnings wasn't there, I think it would have been a really great trade. But so what I love about Target is I think it's a great stock. It moves really well. It has to maintain, for me to be bullish on it, it has to maintain about 130, 135. This upcoming next week is, I personally believe, a very important week for Target, because if it rejects this, then I personally don't see it filling up this gap until maybe not late, but like mid 2025. This gap over here, all the way up to from 132 all the way up to 155. But if we like reclaim this level, because we're trying to do that, if we reclaim this, come back down, bounce off of this, and head up, that'd be great. But if we open up Monday, let's say if it's a gap down, and we don't reclaim this, because if we gap down, there's the chances of reclaiming this level is even lower, because you see the consolidation prior to this break above. So if we just don't reclaim it, you're possibly seeing all the way down to like 102, where it can possibly like double bottom, I guess you could say, or triple bottom, whatever you want to call it, and then maybe test a gap. So I really hope Target eventually does reclaim this level and stays above it, because I do want to trade Target options because they're really great. But yeah, that's Target. Anything you want to say about that, JP?
Not something that I'm watching. Not really interested in trading Target after that earnings drop. Yeah, it has a massive gap to fill, but I'm kind of staying away from it, looking for more high beta stuff.
Gotcha. Yeah, it didn't beat on its revenue, which really brought it down. Next stock we're going to go over, you guys requested, was AVGO. AVGO is a really great stock. I bought this on my long term right over here. For those who's been on here the past weeks, I did talk about this before. I hope some of you guys got into it. We're up very decently on this position. For those who also heard me, when it comes to price action, I always keep saying one of the most important things, and again, we'll talk about price action in another future lecture or whatever live session. But one of the important things you want to always look at, or what I always look at, is wicks, and nobody ever talks about it because nobody ever knows price action. I've really not really met someone who understands price action the way it should be met, it should be understood. And you have to look at the wicks, because wicks really kind of show you the strength of buyers and sellers. And this wick right here on November 27th represented that the buyers were strong enough to push the price down, even though it was push the price up, even though it was a very bearish day. So that means that there is buyers present in this 157 or 155, 61 to 158 area. So you had a really nice bounce off of that. So I'm like, okay, I bought shares. I actually put credit spreads on this. It did really well. You can see here it's done amazing. I think it's from that entry point, it's up 13%, which is really great. But who cares about that if you're not in it? What am I supposed to look at, Kevin? Well, you have a... I'm not really good
Megaphone.
at megaphone. Okay, thank you. I really don't care about names, as you can clearly see. Over my years, I'm so dumb that I just thought, okay, I just know what these patterns do, so I look at it. I don't know the name, but I know what it do, you know. So we're breaching the top area of the trend line of the megaphone. Thank you, JP. Is this something to chase? Again, I'm never an advocate for chasing things. I think you can always be patient. You know, you can wait for something to work for you, or you just move on to the next thing. So your next question would be, okay, what are the next areas that Kevin will look for? And that would be 175. I personally would like a retracement to 175.97. Comes over here, have a nice little bounce off of it, similar to, you know, you could see back here in November 6th. Something similar to that. That would be great. Because if you could get a bounce off of that, you know, that would be great. You could possibly get calls to, you know, test a breakout. Another level that actually won't be as bad is if it comes down to this, let's see, to this 171.83 area. Yes, it is lower than 175.97. I get that. But if it comes over here, it bounces, that's great, because, you know, if there's consolidation coming to this point, and if there's consolidation in this area between these two levels, if it maintains at least 171.83, the reaction or the push up stronger. The push up will be a lot more stronger versus it coming down to 175.97 and then bouncing straight up. So if it comes down here, this is my desired move, right? If AVGO comes down, consolidates a little bit in this area for like 2 or 3 days, this would have a much more stronger move to the upside, because a lot more buyers will be in this move versus a, you know, let's say a retracement to 175.97. You bounce off of that. Yes, you could get a you know, push into, I think there's all-time highs, right? Yeah, all-time highs, but it might not be as powerful or as strong as a push if we get a retracement down here. Anything you want to say, JP, about AVGO?
Love the company. Unfortunately, I'm not in it. I actually, believe it or not, going to wait for that. Is that what is that? 190? Right around 190. I want to see what it does around 190. I would like to maybe take puts if it rejects 190 and comes down to retest that trend line. I would want to retest of that weekly trend line, and then I would probably go long for a break of all-time highs, and then I'd be targeting 200.
Gotcha. Okay. Thank you. Let's move on to the next one. You guys said PayPal. Ooh, I love this. We talked about PayPal in our VRVP live session, and I know I got JP excited because he saw what I was seeing. And is this
No,
complete empty volume gap? Like, this
we haven't
is...
taken it. We're not in it.
I'm in it.
You are?
Yeah, I told you they got shares on it when we talked about VRVP,
Oh, hold on.
but
Time out.
it's not too late. What?
You got shares. We didn't take any options.
Yep. You can have either.
Okay.
Oh, okay. Here, I know what you're saying, but I'll tell you why I'm not thinking like, oh, it's a missed boat, because what you guys, again, we have our YouTube, so you could check that out. We talked about VRVP. VRVP very briefly indicates possible room to the upside if you see volume gaps. So you can see here to the right side, like there's less bars here, right? I'm making it very simple. You guys should watch that video. There's less bars here in this area, and there's less bars here, right? So what that indicates is there's less possible levels around these points. So if price pushes strongly into that area, it's a lot easier for it to keep pushing up. So this is why I think PayPal is a really great. Personally, I think it's really great long-term wise. I do have shares on these. Now heading back into options, which JP was talking about, I think this is a really great stock for options, especially swings. Again, forgive me for my English. I keep on stuttering all the time, but there's multiple levels you could get PayPal, because as you can see on the weekly chart, it's been in this area before, right? It's not at all-time highs, so there is possible places where you could get it. So where would you get it? Well, if you ask me, call options are great. I'm bullish on PayPal. So it's testing this upper trend line right now. So there's few areas where you can get it, and I'm gonna highlight it here where I would get it. Okay, so there's actually 4 areas where you could get it. First area, of course, if you reject this trend line, you come down, you see how it reacts to 187.47, bounces off of the, if you see a bounce off of that on like the 30-minute, I would personally buy calls there, right? That's the first one. Second one is a retracement a little bit lower to 85.35. This is like the lower range of the previous consolidation the past week or two, no, 2 weeks. So if you get a bounce off there, the movement upwards is going to be a lot stronger. So that's my second preferred. My most preferred is if PayPal comes here to 83.77 and bounces off of that, because as you can see, that is a prior resistance that turned into support. So if price comes down here, I personally prefer that. I would get calls. I'll probably get like the 92s or the 90 calls, something like that. The great thing is PayPal has naturally cheap options, so they're great. They have a really great option chain. The last scenario for PayPal to play out bullish sentiment is a break above the trend line, coming down, testing the trend line, or this level over here, which is the top, and bouncing off of that. If I were to rank, this one over here would be my most preferred. This would be my second preferred. This would be my third, and this would be my fourth. But JP, any thoughts on your end about PayPal?
Mm-mm.
No?
You went over it. That's it.
Yeah, I think I love PayPal personally. Next one is Snow. Snow. Okay. So Snow did really amazing on earnings. I actually want JP. Do you have anything to say about Snow by any chance?
Um, Honestly, it's not a company that I follow.
Okay,
Um, like I said, I don't like commenting on tickers or companies that I just don't know anything about. So nothing on my end.
gotcha. Okay, well, I'll keep Snow very simple because I believe it's a very simple trade. Uh, Sorry, I'm hiccuping a lot. Weekly chart looks great. It's bullish. It's not something I would chase right now. It's something I would look to get into. Unfortunately, I'm not in shares in this, but I would like to get into shares and I would like to get into options. But I'm being very careful with this. It has risen a very decent amount, so I would want it to retrace a decent amount. So I'd want it for options to get calls. I would want it to come down to 168.72. I'd like to see a bounce off of there to confirm that this level is valid, and I'd like to take calls off of that. I don't think personally Snow would retrace all the way down to 144.32, but I can't put it past it because this stock has picked up significant volatility, and this is an area that would be really great for shares. So I'm not surprised if it actually comes down here. This is where I would really love adding shares, 144.57, around this general area. You could see it's support, right? This area over here is a support. Support again over here became resistance because we broke below it in May, and then we gapped above it. So I think personally this would be a really important level to look at. I would really love for it to come down here because I personally think this would be great for my shares, and to enter into shares for Snow. And this would be a really great trade for options for me personally if it comes down over here and bounces off of it. But that's all I gotta say for snow. I'm not gonna be chasing it up here, because you guys know me. I like taking trades that have high upside. Uh, Square's the next one. JP, anything you want to say about Square?
I've been watching this company through and through. Unfortunately, it already made a move. I was targeting $100 price target on it. We did talk about it at around the $68 price range.
Correct. Yeah.
Unfortunately, it already went. I think it still has room to the upside. Um, I hate to say this, but I think we're going to run into some traffic right up here. If you draw a
I believe so
horizontal
as well.
line from where it's currently trading
Yeah.
on the weekly, uh, yeah, like right here. Like I think we're going to run into some traffic here. I would want to see a break above 99, come back, retest it, and then look for longs. Um, and my longs would be all the way to 150.
Oh yeah. You could see here I have the bearish fib here. So my price target personally is 164.04. My aggressive price target would be 193.58, which would be amazing. And similar
Yeah,
to
the thing is that if you look at it on the daily, actually, you know what? You're gonna hate me for what I'm gonna do.
yeah,
Let me look at something really quick on the AFGO. I'm sorry, on
Square.
SQ.
Yeah.
Yeah.
Meanwhile, you look at that. Let me briefly just say it's similar. Square, PayPal, Roblox, and forgot the other stock. They have really similar setups. You know, you could see the clear volume gap that here, amazing consolidation prior. So the moves theoretically afterwards, after it breaks out of the consolidation, is very strong. So, yeah, but JP, you figured out what you want to
Yeah,
say?
I mean, price is pushing up,
Hmm.
but RSI is starting to come down, which is showing a bit of divergence. And it looks like it is gonna double top sorry, triple top on the RSI on the daily. So I'm looking at that price versus RSI divergence.
Yeah.
I would like to see this come back down to 87. In an ideal world, it would be incredible if that happened, and then I would go long. The only thing that scares me is now check this out. Maybe I'm just getting ahead of myself. Um, look at it right now on the daily.
I am.
Okay, so if this comes back down to 87, right?
Hmm.
Give or take around 87, I would say, and then comes back up to around 94. Am I crazy to say there's a potential head and shoulders?
I wouldn't be bearish on this personally.
I wouldn't be bearish on it, but do you see what I'm kind of seeing here?
You're talking about the left shoulder being from November
Uh-huh.
21st.
Yep. Yep.
I think for I think for a head and shoulder pattern to work out, you
We
need
need to come back
space.
down.
Not only that, but you need a decent more space between the left shoulder and the neckline.
Yeah. Okay.
So you see what I'm saying? I see
Yeah.
what you're saying. I'm not gonna put
Yeah,
it
I'm
past it.
seeing like we come back down. Yep. Yep. Exactly
Yeah.
that. Yep. That's what I'm a little bit nervous about.
I it's valid. I won't put it past it.
Again,
Yeah.
I'm preemptive striking here, but then again, honestly, this could also be it's ugly. It's there, but it could be a cup and handle.
Oh yeah.
A
I see
bigger
what you're saying. Yep. Yep.
a bigger cup and handle.
Yep.
Yeah.
I think personally, JP, I think it's more bullish.
Oh yeah.
Just because, and I know you think the same way too. Just because of this, you have an entire volume shelf right here. So
Yeah.
I think we might get your 87 level. I'm not gonna. Yeah, I think 87 would be great. You do have intermediate levels such as like $92, but
No, I think 87 is the level.
yeah,
I
because
think that's it.
it's like yeah, around 87 would be a great place. I would add shares. I sold puts on this, so I have that, but I would like to get shares because oh wait no, I do have shares as well. But I'm not in a full position unfortunately, so I've light position in shares. I'd love to get into calls because every single time we got into calls, I don't know if you guys remember, the contracts went like 300% every single time. And we caught most of this rally up, but I would love to get calls if it comes down to 87 or 87.50, you know, level JP said, and we get a bounce off of that. I think if we get a nice bounce off of that, we could break the potential head and shoulders JP was talking about that's possibly there. If we get back above $92, I think this eventually, you know, breaks above 99, and then I think 2025, mid 2025, we test 164. But anything you want to say about Square before I move on? I guess that's a no. Okay, Tesla. I'll go over this very quickly, just because I kind of talked about it before. I think early. I think very.